Hey guys, welcome back to the channel. In today's video, we're going to be replying to a comment from a video that I posted a couple of days ago from one of my followers. They requested a video on how to profit from the market crashing or a tanking US economy. So today I'm going to go through basically how I track the market's fear and greed index and also some ticker symbols that you can use to your advantage to making money off of a potential market crash. So guys, let's dive right on into it. All right, guys, so here is the comment, and this was the video that I posted about how to know when to sell a stock. Okay, if you have not seen that one, it should be popping up right here in the top right corner. Go ahead and take a look at that one. It's some pretty good information. So the follower said, I would like to see a video on how to short the U.S. economy, stocks like VIX or UVXY, etc. If you knew the economy was about to tank, how could you capitalize on it? That's very, very interesting. So let's go ahead and look at what I do here. Again, this is not financial advice, guys. This is just for entertainment purposes. This is what I do. So the first thing I do is understanding the VIX. So you want to understand how to track the volatility and the fear in the markets. First and foremost, you need to know what's going on in the world, right? You want to keep up with the news, read articles, things like that, and just keep up with job numbers and things like that. And just be careful about what you're reading because not everything's going to be to your benefit. But there's so many different resources out there that you can um, take advantage of on either Yahoo or Google or YouTube. There's several channels who do nothing but cover basically what's going on in the U.S. economy. Okay, if you have not seen Jay Bravo's channel, I highly recommend you check his out. He's pretty entertaining, but he also provides some really good information. He actually breaks a lot of the articles down for you and kind of saves you the trouble of reading through, the articles, which is what's good about YouTube, right? You can watch a video and listen to someone else breaking down information for you. So the fear index, basically what happens is when the markets start getting spooked and selling off, this number is going to rise. Higher the number the rise, the more fear and volatility, which is going to give you an increase in price of these ticker symbols that I'm going to talk about here in a little bit, which means that you can make money off of fear, volatility, and a market crash. And what you do is you go to VIXCentral.com, and on VIXCentral.com, this is the number I'm referring to, the VIX, okay? And it's actually risen this morning from last night. I think it was at about 24, a little over 24. Now it's at almost 28. Okay, so when this number rises, that means that we have some selling off in the markets. Something's going on, right? And this number right here, I keep track of. The higher that this rises, the healthier the markets are. The more confidence that the markets have. I've seen it in this past year as high as almost 5, and as low as negative 2 point something. Okay, so whenever there's a lot of fear and uncertainty, this thing goes down, and whenever there's a lot of confidence, that number is going to go up. So I check this on the daily just to make sure nothing you know crazy might be happening. But back in March of last year, this number, I mean, shot up extremely high. But the key thing is if you're gonna profit off of some type of correction or crash, you want to maybe buy into these tickers that I'm going to go over whenever that number is low and everything's kind of calm. The other thing I do is I check out the fear and greed indicator. So it's very simple. If you go to Google and you type in fear and greed index, it's going to be literally the first link that pops up. You're going to click on the fear and greed index um, link, and there's going to be an indicator, and it's going to show you basically where the market's at. Okay, and you can see, are we in fear, are we neutral, are we greedy or extreme greed? So when the markets are overvalued like they have been the past couple of months, we are in greed and potentially flirting with extreme greed, which means something can happen to where we can have a potential pullback or some type of crash, obviously, okay? And that's whenever you would probably look to go ahead and buy in to some of these plays that I'm going to talk about, is because you get them at a cheaper price. the markets are, really, really confident, and you can see the potential for a pullback. And then basically when you go back and you can track this fear and greed indicator, when it swings back to the to the fear level, then that might be a good time to exit these volatility plays and then get back into the market. Okay, guys, so this is the indicator that I'm talking about right now. We are at 59% greed. So if, let's say, we have a huge push to the upside and we end up somewhere around here into extreme greed, then that would be a good time to maybe think, okay, we're due for some type of pullback, which we were somewhere over here recently before our pullback. And then back in March of last year, whenever we had the crash, we were all the way over here, guys. So that's where it presented a great time to come in and scoop up some stocks at some big discounts. All right, guys, and here are some ticker symbols that you can use to short the market, okay, or just kind of play volatility here. So UVXY, I talk about this one on the channel. I've actually had it on my stock picks a couple of times just because I knew the markets were overvalued and we were due for a pullback. That's one that I'm familiar with. SQQQ is one that specifically goes against the NASDAQ. All right. And basically, if the NASDAQ starts taking a dump, then this particular play right here is going to rise in value. And then you have a couple of other ones down here. If you're short the real estate market, and if you have a feeling that the real estate market's going to tank, then these are two other plays that you can get that will go against basically the real estate market. And these are extremely cheap right now. Not much is going on with them. I've actually played them before. Last year I got in at, I think under $10, and they shot up to about 15, and I cashed out. So, I have played these before, but I haven't got in since. So these are just some plays that I'm familiar with that you can use to, go against the market. So it's important to understand the risk involved in these particular plays because historically they basically decay over time. They're just steadily in a downtrend, and then every now and again they have a spike to the upside. They won't fully go, all out beast mode unless we have some type of huge crash in the markets. And in the comment, they talked about the U.S. economy. Well, if something happens with the U.S. economy, obviously it's going to bring the markets down. Just like what happened in March last year, what happened, the entire economy just shut down. So of course it crashed the markets. They're extremely volatile, meaning they can shoot up within an hour, $2, $3, $4, $5, and then the next hour they can shoot down 5, 6, 7, $8. Okay, so they're up and down constantly, and it's really, really hard to time as far as trying to get these things right, which is why I prefer playing off of UVXY, and I just play off of the S&P 500. Basically, when the S&P 500 is really overextended, UVXY is completely undervalued, so I can buy in there. And then whenever we get any type of pullback on the S&P, UVXY will pop up a couple of bucks, and then I'll just get out of it. So with risk, sometimes can come rewards. So your rewards, guys, if you want to, if you're trying to short the market big, then you can buy a little of these, over time. I wouldn't go all in or anything like that because, like I said, they're just going to decay over time. So if you put like a ton of money into these particular plays and you're just sitting on it, you're going to be losing a lot of money, and you can potentially have to wait just to break even, or you may never get it back. Okay, if you don't time it the right way. So if you're going to try to go this route and play it, it might not be a bad idea. You can grab a couple here or there, a couple of shares here or there, and just continue to average down as they go down. And then if for some reason something big happens to where we see a huge spike up, then for sure you'll see the rewards on that. If it does take a big crash. But you can always do some day trades on these things, but it's important that you learn how to read indicators, read the charts, and I talk about that on my channel. That's extremely important. I do have videos that breaks down how to use the indicators off of the Thinkorswim platform. If you haven't seen those, you need to go check out my playlist. I have 7 videos that teaches you how to do that. My recommendations, guys: know the charts, study each ETF listed and how they work, and 1 to 2 day max hold. I wouldn't do any type of long-term trades on them. In my opinion, I would stick to day trades. That's just my experience and my recommendation on it. All I got, guys. Thanks for watching. Make sure you like the video if you enjoyed the content, subscribe to the channel, hit the notification bell, and comment below on what you'd like to see moving forward. So other than that, we'll catch you in the next video.